Conclusions: inflation is inevitable. 对吗
Inevitable.
Inevitable. Inflation is inevitable. 对吗
Inevitable.
Inevitable.
Welcome to Real Estate with Jean and Andrew.
找房找屋啦
In this video series, we will share valuable insights about real estate to add value to our clients and viewers.
Today we are diving into the topic going over hedge and beating inflation.
Ever notice your favorite wonton noodles getting more expensive? You might call it inflation, but is it really? Let's break it down.
What is inflation? Inflation is the rise in prices of goods and services across the board. If prices increase because of higher demand, like when a hawker store gets a Michelin gourmet, that's not inflation, that's popularity. Inflation is measured by the rate at which prices rise over time. A slow and stable increase indicates a healthy economy, but when prices rise too quickly, our purchasing power decreases.
How is inflation measured? In Singapore, we use the Consumer Price Index to measure inflation. That's called CPI. This is based on a fixed basket of 6,800 goods and services commonly purchased by Singaporean households. The prices of these items are tracked monthly to determine inflation trends. Real estate is included in this basket, but only in terms of rental cost, not property appreciation. So, when you see inflation rates, they don't reflect the price of buying a new home. There are two types of inflation. Number one, headline inflation includes all items in the CPI basket. Number two, core inflation excludes accommodation and private road transport. For this discussion, we will focus on headlines inflation to see how much more expensive life has become.
The rising cost of living over the last 20 years, Singapore's CPI has risen by about 52.1%. That means goods and services today are 52.1% more expensive than they were 2 decades ago. Think about it, $10 today buy you 2 plates of chicken rice, but in 10 years, you might only afford one. This is why people look for ways to protect their money against inflation.
How do we hedge against inflation? Number one, avoid keeping too much cash in bank. Leaving your money sitting in a bank account with minimum interest won't keep up with inflation. Your purchasing power declines as prices rise faster than your savings grow. Number two, growing your money over time. Salaries are supposed to rise in line with inflation, but how many of us can say our pay rises truly match the rising costs of living? This is why investing is crucial. Number three, choosing the right investment vehicles. Unless you are earning a 6-figure salary, investing is a smart way to grow your money and safeguard your financial future. Even high earners have investment plans to ensure their wealth continues to grow. Comparing investment options, let's look at different assets and how they perform as inflation hedges. Number one, real estate, Singapore private property. 20-year growth annualized is 4.76%. The pro is capital appreciation, rental income. The cons is high entry cost, low liquidity, and risk level is low. Number two, stocks, S&P 500. 20-year growth annualized is 7.7% compounded. The pro, low entry level, liquidity, and have dividends. The cons, volatile, market risk, and risk level is high. Number three, gold. 20-year growth annualized is 8.26%. The pro is liquid, hedge against fiat currency. Cons is no yield, storage needed, volatile, and risk level is medium.
Real estate as a strong hedge against inflation. Historically, property prices in Singapore have outpaced inflation by nearly 3 times. Here's why real estate is such a good hedge. Strong demand, limited supply. With limited land and growing population, property value stands to rise over time. Economic stability. Singapore's stable economy makes property investment safer compared to volatile assets like stocks. Rental income. Rents increase with inflation, ensuring property owners benefit from higher yields. Government support. Policies regulating the real estate market ensure price stability and growth. Capital appreciation. Over time, property values increase, giving investors solid returns. Portfolio diversification. Unlike stocks or gold, real estate is a tangible asset that generally holds its value.
Why real estate over other investments? In Singapore, real estate stands out because of government intervention that ensure market resilience. Unlike stocks or cryptocurrency, property prices here are unlikely to experience a sudden crash. Another big plus, rental income. Imagine earning a steady passive income every month from tenants while your property appreciates in value. That's why real estate remains a top choice for long-term investment.
Conclusion: inflation is inevitable, but you can take steps to protect your wealth. Whether it's stocks, gold, or real estate, understanding what you are investing in and managing risk is key. And if you're considering real estate, now might be a great time to start looking at the market. As your trusted property consultants, we are here to help you explore your options in the real estate market. If you have any questions or need assistance finding the right property, please don't hesitate to reach out. You can contact me, Jean, at 9667-1431 or Andrew at 9626-4413.
Together, let's make the best property decision for you. Thank you for tuning in to Real Estate with Jean and Andrew.
早房早屋啦. If you found this episode helpful, please like, share and subscribe for more insights.
We'll see you next time.